I hope everybody is doing well. I just wanted to spend just a few quick minutes in a supplement to our newsletter that we sent out today and we'll send out on Friday to just give a quick overview of where we are and where we've been. We all know this chart. We all know the depths of we've felt in the stock market and in the economy. And while we're not out of the woods yet, we've seen a nice recovery in the last few weeks. We've seen a lot of volatility in the positive, which is good, but this week we're seeing some volatility in the negative, which is bad, right? There's been a lot of run up in the market and now people are starting to take some of those gains off the table. Well, why do we have such a good run in the market? Jobs. We saw 2.5 million jobs created in May that brought our unemployment down to 13%. Now for context, we are at 14.7, with many economists fearing that with May job numbers, we're going to get to almost 20. So to be at 13 is great, but that's still more than what we had during the Great Recession. Oil's starting to come back, restaurants are opening back up, oil and demand are back up, even people are starting to even travel a little bit where necessary. It feels as if the market is reacting to the economy starting to open back up again. And we've seen it. We've seen it in our state, and you may have seen it in yours, where states are opening and people are going out and people are spending, and that's great news. As long as we don't see a huge increase of cases in COVID, the market can get back to normal, which is a reflection of the economy, which is even more important. But what we'll see is scary headlines. We're going to be closer to 19,000 on the Dow than to 29. No, it's a V-shaped recovery, right? We had a really poor economic information, a poor stock market, and we're going to shoot right back up. What we know is whatever news you want to hear is what you'll hear. If you want to be optimistic, there's enough headlines. If you want to be pessimistic, there's more than enough headlines. As always, it's vigilance. Do you have a plan? Do you have an asset allocation plan that has your eggs spread out in multiple baskets? You should. And if there were corrections or changes we need to make, we would certainly reach out to you. But look in the newsletter today. We'll have information from the Federal Reserve Chairman on what his notes were. We'll have more information about the opening up of the economy. And as the economy opens, as people get back to work, as people start spending, that's good for the economy. It's good for the stock market. And so just be on the lookout for today's Market Minute, Friday's Market Minute, and Market Minutes as we go on, as we continue to update on what's happening in the market. Thanks, and everybody have a great day.